Good morning, welcome to this weekly market update from MRC Markets. Today is the 23rd of June 2014. What I'm going to do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. I'm not making any trade calls recommendations in this video. You do trade at your own risk. If you could please read our full disclaimer on our website, which is www.mrcmarkets.com. That will be most appreciated. For any new followers out there, we do have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple moving average, and the gold is a 200 simple. Okay, let's have a look at the Forex calendar quickly, just to give some sort of outlook for this week to see what we've got going on. Today we've already had some data come out, so I'm doing this video, well, pretty much 10 to 9. At 8 to 8, well, overnight we had China HSBC flash manufacturing PMI data, so that came in stronger than expected, 50.8. We had Bank of Japan Governor Kuroda speaking, didn't say too much. At 8 AM we had the French flash manufacturing PMI numbers and the German flash manufacturing. The French both came in well, because we had the manufacturing services. They both came in weaker than expected, and the German ones both came in weaker than expected as well. So we're seeing a slight sell-off in the euro this morning. In terms of high impact data for the week, well, for the rest of the day, we have the US existing home sales at 3 PM. Tomorrow at 9 AM we have the German IFO business climate. We have from the UK we have the inflation report hearings, so that's 9 AM and 9:30 AM. At 3 PM we have some US data, so you've got the CV consumer confidence and the new home sales. On Wednesday we have the durable goods numbers, so you've got the normal durable goods, and the high impact one is the core durable goods orders, that's a month on month. And on Thursday at 10:30 AM we have Bank of England Governor Carney speaking. We have weekly jobless claims at 1:30, and on Friday we have German preliminary CPI, that's the month-on-month figure, at 9:30. You've got the UK current accounts, and that is it in terms of high impact stuff. So not a massive week for data, pretty standard week really. Nothing major there. There's no sort of NFP or any NPC stuff or Draghi speaking, etc. So a relatively standard week for data. Okay, let's flip towards the charts. What's going on in the euro? So this is the weekly chart here. Last week's weekly candle, not amazing. I mean, we did get a close back above this 50-week moving average here, but there's still a bit of upper wick on that. It's just a standard sort of retracement candle, I'd say, really. In terms of sort of fibs, nothing major standing out. I mean, this one here, remember that the support that we were talking about last week, where the 38.2% retracement level, which I'm just going to draw on view here. That's the key support that's currently holding. That comes at 35.20s. So key support, you can see it nice and clear there on the daily as well. I'm just going to draw that level on there. Because we do well on these videos, we just sort of focus on the 50%, 61.8 as sort of retracement areas. So I'm just looking at 38.2 now. So that's the key line in the sand going into this week. The key support is holding very well. And yeah, in terms of fibs towards the other side, the weekly, it's all about this one here we spoke about last week. But last week you can see we didn't get that much movement. I mean, the last week's weekly candle, nothing majorly of interest in terms of the range and the size of it. But I wouldn't be surprised to see this week it continue to perhaps grind higher towards that 50%. If we're going to get a brief bounce up, which I think it will be brief, because I personally think it will want to come down to a healthier sort of level. I reckon down towards this 50%, maybe, or the 61.8 on there. I wouldn't be surprised to see that. But if we are going to get a brief pop up, then definitely keep an eye on this fib. That's one I'll definitely be looking at, and I think a lot of traders will be looking at as well. Reason being, the 50% coincides with a nice round number as well, which is the 3750 handle. And it's just a nice sort of pure downtrend really. pure downtrend. If we do get a bit of retrace, then yeah, you've got the 100-day moving average as well coinciding with that, but of course keep an eye on the 50-day and 200-day moving averages as well. And that's pretty much it in terms of the euro. Cable still in grind high mode, just killing it towards the upside. You do have the 170 market is the key. The key level there. We did get a weekly close above that last week, which I think is very significant. I mean, you're talking it's pretty much testing that 2009 high now, which is pretty much the one spot 70.33s, I think it is. And yeah, in terms of the fibs, you can see it much clearer on the daily. I'm going to zoom in here as well. So we had this first move here, remember, low to high, came back down 61.8, rotated towards the upside and took out the 0% line there. Then the next move, if you took the low from that 50% bounce, this move here, lovely uptrend, retracement down off this sort of 50% retracement, and it's grinded high and closed above. So if we do get any retrace on cable, then this would personally be the low that I'll be looking out for, and reason being is because that was the dip bounce there, the dip low. So yeah, the 50% on this one comes in at one spot 68.72s. But in terms of levels going into the week, it's just all about the 170 handle, in my opinion. And you have got the 170.50s as well, which is the pretty much the resistance holding it in a minute. But in terms of intraday stuff, it's all about just keeping it simple. Just the 170 level, 170.50s there. So new resistance could act as new support, and you've got this current resistance here, the 170.50s there, which you can see is already acting. 3 daily candle test there and close below. So yeah, it should be an interesting week on cable. I mean, in terms of the weekly action, you can see last week's weekly candle is a nice sort of continuation pattern, but there is a bit of upper wick on that, so I would not be surprised to see it retrace this week. But of course, it could just continue to grind higher, as it has been pretty much all year and last year as well. So yeah, it'll be an interesting week, definitely. But it's all about these levels here, in terms of what's going to happen. You can currently see this current 4-hour candle is starting to react quite bearish to that 170.50s there. So yeah, let's flip to the dollar Swiss. What's going on the dollar Swiss in terms of the weekly? What we've been speaking about for the last few weeks, it's been sort of grinding higher off that 0.87s of that weekly candle. And last week's weekly candle, nothing major of interest there. It still hasn't tested the 50-week moving average to the pip. But it is starting to stall, but there's still some lower wick in last week's candle. I mean, yes, last week's candle was a red body, but there is some lower wick on that, and you can see it clear on the daily. There's a nice support at the zero spot, well, pretty much the 89s there, and similar to euro, what we're speaking about is the 38.2. And that is the same here on the dollar Swiss. On this, I've just flipped it to the daily here. The 38.2% retracement is acting as the support there. So that's 0.8909s there. That's the level. You can see you've got the 50 SMA as well, 50-day moving average. Just below that as well. So yeah, it does look like, I mean, in terms of the sort of the daily candlestick patterns here, of course you've got the 200-day moving average there as well. It does look like it's happy to grind higher, but it is still technically going sideways in between this sort of range as well. So that's the 0.90 handle. So you're talking about pretty much 100 pip range there, which is it's been going around for the last few weeks really. Where you can see that clear on the weekly chart, actually pretty much the last 3, 4, 5 weeks there. But I wouldn't be surprised to see it continue to grind towards the upside, especially towards that 50-week moving average. But then in terms of the weekly fibs, you want to look at the bigger ones, then it's all about this one here, I reckon. So that's the weekly fib from the high of 2013 to the low. And that the 38.2 actually coincides with previous resistance as well. So maybe it's all about the 38.2 retracement in the minute. That coincides with that previous resistance. That comes in at 0.9137s there. But in terms of levels, yeah, I just keep it at those two there. You can see it clear as day there on that daily chart. Lovely 100 pip range there, pretty much. We need to see it break out either side there, but it looks like we're going to get another test this week of that 0.90 handle, so keep an eye out on that. Aussie on the weekly, similar thing to dollar Swiss, actually what we've been talking about, them two levels there, but we've been speaking about this for many weeks now. It's 200 pip range on Aussie. Interestingly, last week we had another test of this 94 and it closed below, but you can already see today we're currently above it, so maybe this is the week where we're going to see that weekly candle close above this 0.94 handle, and then that should give the sort of trigger to grind higher towards this 100-week moving average here on the Aussie. And don't forget this fib here on the weekly. So I'm just going to take off the 38.2, but interestingly there again, the 38.2 coincides with that 94 handle as well, so no wonder it's been acting as such decent resistance there for the last few weeks. But yeah, the 50% here comes in at the 0.9620s. And in terms of the shorter term stuff, so the daily chart, well actually we'll leave on the daily actually. What did I say about on the daily last week? Was in terms of mid-range, if you're going to have a look at any sort of fibs and you think it's going to break towards the upside, which I thought the odds did favour, it was all about this fib here, so that was that swing low there to the swing high there, and surprise surprise, with a lovely bounce off the 50% retracement, and we're grinding high. You can even see that nice and clear there on the 4 hours. So that was pretty much the low of the 4 hour chart to the high of the 4 hour chart. Lovely spike there off the 200 SMA as well, and we got a lovely pop towards the upside. You can see we're currently testing this 0% line now. We just had a 4 hour close below it, so we may perhaps get a brief retrace, and then it'd be interesting to see what happens if we do come down towards this 0.94 handle here. We could get a nice reversal there and perhaps go towards the upside. But yeah, it's been nice. It has been tech. I know it's been chopping around, but there's still always opportunities there, especially that fib being a prime example there. Gold on the daily, we really have broken out now from this this trend line. I mean, I'm surprised it didn't break out from this fib here, because that was acting really technical for a while, but we've got that close below, and then it held off of, I think it was 1240s, wasn't it? Yeah, the 1240 handle, and it just ripped towards the upside. In terms of shorter term time frames, what I spoke about last week, we had this fib here. I think I might have tweeted that as well. So I'll just delete its trend line for a bit. We had this nice fib move here. So if you're a bull last week, lovely uptrend, retracement to the 50%. It did spike below. Then we got a nice support for the 100 SMA there, and it's just ripped towards the upside. So a classic fib action there, pure uptrend, pure retracement down. So not too. When I say pure, I mean not too much sideways choppy action, and then a lovely pusher up towards the upside there. So in terms of dips, if we do get a retracement here, I personally would just be looking at that extension there, so just extending the low up from where we've bounced there, and extending the high from the recent swing higher here. So this is a lovely uptrend. If we did, I mean, it looks like it could just keep on grinding higher. It may not retrace down, but if it does, then that's the fib that I'll be keeping an eye out for. Personally, I think a lot of other people will be as well. And this 50% coincides with the 1290 area. So that's the view on gold. Actually, one other thing to keep an eye out for, is actually coincides with the weekly as well. So we're going to take the weekly high here, well, the high on the weekly chart, the high of the year, sorry, and that is the fib move there. And surprise, surprise, where are we getting held out? We're getting held at the 50% retracement. As you can see there, we've had, well, last week we had 4 daily candles where we pierced above here and we closed above, and this 50% comes at 13/16. So if we are going to get a grind higher, then it needs to get a daily close above. But if we're going to get a nice retracement, then this will be the time to retrace off of this level, and then we're looking at that small fib here. Remember, so this is it on the daily chart. We just spoke about that one there. So yeah, that's it on gold, and that's all done for the charts. If there's any other charts that you want me to have a look at next week, then feel free to comment under the YouTube channel or send us a tweet to our Twitter feed, which is at MRC_markets. I hope you have a great rest of the week trading, and I'll catch you next Monday. Thanks for watching.